Bismillahirrahmanirrahim. Welcome back. So, last video of this series of session, and I hope that you people have got very valuable inputs, including exam techniques and the rules. And my suggestion is that you have to follow these instructions and apply all these techniques with your exam practice questions. And used to apply these techniques, so automatically these techniques will embed with your examination of SBR, exam paper of SBR, and you will be able to get distinction, inshallah. So let's start. Step 7, the new change. Start from September 18 exam, strategic business reporting paper. Part C3, 12 marks, using all exhibits. So ready for this. Using pre-populated spreadsheet response option. Pre-populated means auto-filled. So using auto-filled spreadsheet response options with exhibit 3 and your previous answer means all above answers, considering all above answers. It just the spreadsheet prepared by the directors of Chuckle company in order to prepare consolidated statement of financial position at 1st April X6. So the requirement is about to correct consolidated statement of financial position. It's not about to prepare consolidated statement of financial position. And in fact, examiner will never ask to make any consolidated accounts, either SFP, either SCI or CF, that's cash flow. Further, the spreadsheet here, the spreadsheet should take into account the following. Take into account following means the scope examiner mention here that you have to make correction with these adjustments. Number 1, accounting for associate using equity method. Number 2, change in classification from associate to subsidiary. Number 3, fair value adjustment including deferred tax and goodwill using proportionate share of net asset method to calculate, and NCI as well. NCI. So basically, all these adjustments already you have covered with your previous requirement. So let's move. Number 1, as usual, even the question about drafting or the question about calculation, first have to make a great plan of attack. Number 1, time management. The rule still 20/80. 12 marks means you have 22 minutes. You have to invest 20% time. That means 5 minutes for proper reading, understanding, and composing your mind. And 80% of the time you must have to invest for the calculation, for execution. Make sure that have to complete your question within the time frame. So that's important. Another point, be careful about what have you read and understand the requirement very carefully. Here with this slide, we will also cover to develop the mindset or mind framing. That is the rule number 2. So once again, using auto-filled means pre-populated spreadsheet response with all above requirements. Adjust the spreadsheet prepared by the directors of Chuckle in order to prepare a corrected CSFP. So question is about CSFP, consolidated statement of financial position, and you have to make corrections at 1st April X6. That is the acquisition date. Acquisition date here in this question, 1st April X6. In this question, acquisition date and consolidation date both are same. Further, the spreadsheet should take into account the following: accounting for associate using equity method. change in classification from associate to subsidiary, fair value adjustment including deferred tax, goodwill, NCI. Reading the requirement 2 or 3 times is much better rather than someone just in hurry to read the requirement and not able to properly understand. So read and understand the requirement very carefully. Once again, highlighted point, corrected statement of financial position. You have to make a corrections over there. Number 2, scope of correction is this. These 5 adjustments you need to consider. Here, examiner particular mentioned the correction of error scope. And I personally think with the examination context, examiner will particularly mention what the scope of the correction of error. Furthermore, based on the SBR examiner team document, based on the SBR examining team document, the scope of requirement with this pre-populated spreadsheet requirement, the possible exam requirements. Number 1, either correction of errors means something already calculated and given in the question, you need to make adjustment, correction of errors. Second one, maybe something missing here. For example, in this question, Goodwill and NCI is missing. They have already made the consolidated balance sheet, but Goodwill and NCI is missing. So possible requirement, something already made, something already given, but that's wrong. You need to make correction. Second scope, data is available, but something is missing. And number 3, requirement about discussion. It's also possible that examiner will ask you whatever the correction and whatever the missing figure you have done, correction of errors or missing figure you have done. So explain that point. This is not the requirement with this specimen 1 question, but examiner can examine this. But once again, this requirement about discussion, it's not very much challenging. We have already discussed. It's simple interpretation of the facts. Whatever the correction you have made, whatever the missing figure you have incorporated, just make interpretation. It's very simple. So that is about drafting technique 2 that we discussed earlier. So let's refer the spreadsheet. Come on. This is what pre-populated spreadsheet. Number 1, whenever you are entering the question, or I can say that whenever you are going to attempt this spreadsheet based question, that's correction of errors or the missing figures, 2 things first need to consider. It's my advice to all of you people. First of all, carefully read all the available data. That means whatever the auto-filled or pre-populated balance sheet or income statement or information available, very carefully you need to read it one by one, line by line. Number 1. So quickly, rule number 1, have to read it. Number 1, property, plant, equipment. And develop your mindset, property, plant, equipment. This is a consolidated statement of financial position. So with this property, plant, equipment, considering the requirement, we need to incorporate the fair value adjustment. Okay. Then investment and associate, 100. Further investment associate, 66. So this is what, with the context of the question, it's something about cost, 100, the original 30% cost, further investment 18%, 66 cost. So equity accounting is missing here. It's already mentioned with the context of the question. We will read it. Goodwill missing. Goodwill is missing here. So I can say that property, plant, equipment, consolidated accounts need to make correction. But goodwill is a missing figure here. Other non-current asset like database, current asset, inventory need to adjust. Then share capital, OCE, retained earning, and here mentioned NCI, that's also missing. So carefully read the requirement. Grants equity, subsidies equity value. That is something wrong reflected in consolidated accounts. And this grants equity at the time of acquisition, this 348. Carefully read this. So this is error. Need to adjust, need to minus it. Non-current liability in deferred tax liability, we need to make adjustment here. And here with this autofill data, examiner highlighted to make any working you need, you have to put your workings here. So first thing, whenever you are attempting the question with this pre-populated spreadsheet, pre-populated availability of the pre-populated spreadsheet function, and you are going to start question. First of all, you have to read whatever the data available. Number two, once again, quickly read the scope of error. There are 5 errors that you need to adjust, or some missing figure you need to incorporate. So second point is that you have to develop your mindset how I will make the adjustments. So you have to develop your mindset that I will make adjustment like this. Adjustment number 1, for example, equity accounting. Adjustment number 2, you have to write it, equity accounting, step acquisition. 3, for example, there are 3 adjustments, let's suppose. So these are the adjustment. And the final column is adjusted consolidated statement of financial position. That's you make plus minus and adjusted consolidated balance sheet. And I strongly suggest one column for the reference of the working. Here you have to mention the working. Means, for example, if you are calculating the goodwill, so goodwill calculation you have to work out here. Let's suppose goodwill or investment associate, you have to work out here, mentioning the number, working 1, working 2, 3, 4, and incorporate the numbers here. Incorporate the numbers here. Adjusted and put a reference 1, 2, 3, 4. So first thing is that whatever you are doing, think about it. Think before attempt. Plan before attempt. That's a key point. So now it's time to execute. Let's start. So very first point, the student will face the challenge from where the adjustment should be started. I strongly suggest the adjustment should be started with the sequence of adjustment mentioned by the exam. Number 1, for example, accounting for associate using equity method. So first adjustment, that is equity accounting. Equity accounting. So for equity accounting, definitely you need to make some working here. So number 1, put some working here for the equity accounting. Working one. I hope that screen is clearly visualized to all of you. Now it's much better. Working one. That is investment in associate. Investment in associate. So quickly take a reference of all details. Number one, here mention that the directors of Chuckle, that's exhibit 3, have prepared a spreadsheet for consolidated statement of financial position. 1st April XX. Investment in Grin have been stated at cost 100 million and 66. Cost 100 million and 66. So original 30% cost 100, further 18% 66. If examiner asking you about equity method accounting, so that is about 1st April X4 to 1st April to 31st March X6. That is the equity accounting. Because 1st April X6, the equity accounting reclassify to acquisition accounting as subsidiary. So the important point is that here 166, okay, and the net asset of Grin have been included in the carrying amount. The equity of the Grin company also been included in the balancing figure, and goodwill has not been calculated. Then a further investment 18% and cash amount 66, and the fair value original 30%, it's 127. That is the first part. With the first spreadsheet, with the first exhibit, it's very categorically mentioned the carrying amount of Grin 1st April X4 286. And at 31st March X6, it's 348. That's we have already covered with the previous requirements. So let's start the working accordingly. Number one, the cost at 1st April X4, that is about 100 million. Then share in post acquisition profit, that we have already covered with the post acquisition profit, and it's very simple. That is 348 minus 286. 348 minus 246 into 30%. That is 30.6. One moment. Sorry. 286. That's 18.6. So that is 100 plus 118.6. This is equity accounting. This is equity accounting. And this share in post-acquisition profit is missing here. So important point is that this 18.6, investment and associate, 18.6, that you need to add with investment associate. Do remember, the first adjustment is investment associate, no step acquisition. Step acquisition adjustment is the second point. So what will be the entry? Investment associate debited and retain earning, profit to retain earning credited. So retain earning will increase and investment associate also increase. So that should be plus. Okay, next. Now the next requirement. The first one you have done, accounting for associate using equity method. It's all clear. Now, the change in classification from associate to subsidiary. From associate to subsidiary. So here change in classification, that's called some fair value adjustment. Fair value adjustment, that step adjustment. Okay, so that is about the original investment. The original investment. The fair value of original investment of 30%, 127. But actually, in the consolidated balance sheet, it reflects only 100. So fair value of original 30% investment at the date 1st April X6, and that's about 127. So this is the balancing figure. This is the balancing figure. That's a fair value adjustment. And we need to put the fair value adjustment. Fair value adjustment. And we have to add a column that's a step adjustment. That's called a step adjustment. Step acquisition adjustment. Yes, step acquisition adjustment. And that is about 118.6 and value is 8.4. So what should be the entry? Investment debit and retain earning credit. Profit to retain earning. That's the second adjustment. Okay, next. So second, accounting associate done. Change in classification from associate to subsidiary done. Now it's about the fair value adjustment. Fair value adjustment. This fair value adjustment required to calculate the goodwill fair value adjustment, also useful for goodwill calculation. Okay, so fair value adjustment, that's land fair value increase, and we will incorporate the fair value adjustment with the asset and the deferred tax liability as well. Inventory fair value, that's increase. Database, that value increase, or we cannot mention, no need to mention the term increase. You can mention that, no worries. That's the point. Now fair value adjustment, one by one. Fair value adjustment. By the way, the fair value, previous example we have already covered. The land increased by this value, inventory increased by this value, intangible assets increased by this value, all these things. But you have to mention the fair value adjustments. That's working to fair value adjustment. Fair value adjustments. Number one, one by one. Land increased by, we have already covered the things. That's from 50 to 60. That's 10. Land increased by 10. Inventory increased by value. $131 minus 84. That's 47. Okay. Inventory increased by this. Then database value 5 million. And what about the deferred tax liability? That is working 3. Assets. These are the value of assets. Here deferred tax. Deferred tax liability. Land. So do we need to work out individually? Yes. Database. At the rate 20% is equal to 10 into 20%, 47 into 20%, 5 into 20%. That is the value of the deferred tax. So fair value working all done. You have to make a sum here. Yes. Okay. So, hello, all of you are with me. You must be with me. That's very important. Now incorporate all these adjustments. All these adjustments. Is equal to B49 is equal to 50, B50 is equal to B51. That's the values. That's 10, current asset, here 47, and other non-current asset at this place. Yes. These are the values of fair value adjustment 10, 47, and 5. Now come on. About the deferred tax liability. Deferred tax liability related to land inventory database. For the land B55, 56, 57. B55, B55, B56, B57. That's the values of the deferred tax. So I hope it's clear that first we have incorporated the data of fair value adjustment. That's all asset increases. And then the deferred tax liability increases. So asset also increase, liability also increase. Net effect, asset and liability automatically incorporated with the equity. So that is what about the second adjustment. Sorry, that's about the fair value adjustment and the deferred tax liabilities. Very simple. Next, 1, 2, 3 done. Now Goodwill and NCI. Now Goodwill and NCI. Working number 4. Goodwill. Proportionate method. Now come on. Investment. Very important thing. Goodwill is now going to calculate with the concept that now associate accounting reclassified to acquisition accounting, means consolidation. So all the investment must be at fair value and close to the goodwill. So what the investment fair value at that date? Total investment fair value. So original investment 30% 127 plus new investment of 66. That's 193. Once again, the new 18% investment, new 66 value, and the previous 30% investment. With the fair value 127. So 127 plus 66, that's 193. And that is what we need to calculate the goodwill with this cost of investment. I hope it's clear. If you have any query, you can ask me on the WhatsApp. Don't worry. Or if you wanted to bifurcate, you can do that. For example, investment of 30%, first step, 30%, its fair value. Its fair value, that's 127. And investment, second step, 18%. That's already fair value. Means at the date of purchase, 1st April XX, 66. So the total is, so you can do this manner, no worries about that. It's your option. Either directly calculate 193 or make the things accordingly. Number 2, NCI proportionate method. Proportionate method. So NCI proportionate method. So whatever the net assets of the subsidiary at the date of acquisition, subsidiary net asset at the date of acquisition at fair value, you have to apply 52%. So here we need to calculate fair value net assets subsidiary at fair value at 1st April XX. Number 1, the carrying amount of net assets, Exhibit 3, the book value 348. So number 1, book value 348. Fair value adjustments, assets and deferred tax liability. Assets 62 increase. Liability net asset by liability net asset decreases is equal to sum 397.6. 397.6. So quickly, investment 193, NCI 397.6 into 0.52, 206.75, and less fair value net asset subsidiary at acquisition. So goodwill at acquisition and consolidation date, because acquisition consolidation date both are same. That is 2.15. The goodwill value is 2.15 and NCI at acquisition and consolidation 206.75, because the date of consolidation and acquisition both are same. So we have done 206.752 and 2.15 NCI goodwill, and we need to adjust the thing accordingly. Now the final point. Here I will mention goodwill and NCI. Goodwill and NCI. But also we need to consider that the consideration means consideration or investment consideration or investment to goodwill means once you calculate the goodwill, refer to your studies, once you calculate goodwill, all the cost of investment need to close with the goodwill account, because the double entry is this: all net asset debit, cost of investment credit. Net asset debit means asset debit, liability credit, that's a net asset. All cost of investment close, credit, NCI credit, and the balancing figure is goodwill if it's debit. So it's very simple. So number one, here incorporate the goodwill. Yes, goodwill. This is the value of goodwill. Number one. Number two, NCI. NCI figure here. NCI. And all the cost of investment must be closed. All the cost of investment. So whatever the cost of investment, that is these two are the cost of investment points. That should be closed. Is equal to minus 26. Close means that should be minus. So minus 66 minus 127. That's that's need to adjust now. That's need to adjust. All the cost of investment must be closed with the goodwill calculation. That's done, except one thing. A correction need to make, an adjustment need to make as correction of error. That is Grin's equity. Subsidies equity at the date of acquisition 348. 348. This 348. Reflecting here 348. That's wrong. So make a column. Remove Grin's equity. Green's equity. This 348 need to remove here B26. Minus 340. Now that's all done, huh? All adjustment. Adjusted consolidated statement of financial position. Adjusted consolidated statement of financial position. So you have to make a sum. You have to make a sum here. Is equal to sum that is 2031. Control C. Control V. Control V. Okay. Control V. That's good. It's very basic. Control C, Control C, Control V. That's 191. And we need to make a total here is equal to sum. That's a total here. 224.152. And then current assets. Control C. Control V. 589. And here we need to sum 28 total asset 2813.2. Now working with equity and others. Working with equity and others. Apologies for this. Yes. Final point. Control C for share capital. Yes. Control V. Control V. Control V 1184. So here we need to total of the total equity. Yes, 1704 total equity. Come on. Control C. NCI value 206 point. This is the NCI value. 75. C. Control V. That's become 0. Okay. Deferred tax. Control C. Control V. Deferred tax liability. And the current liability. Control C. 576. So here we need to calculate the total liability. Deferred tax and this is equal to this and this. This is total liability. And this is NCI. So total equity and liability. Equity belongs to parent plus equity belongs to NCI plus total liability. 2813.5. Tie. Balance sheet tie. Examiner will never ask you to prepare the consolidated balance sheet, but examiner can ask you to adjust the balance sheet, and you need to conclude with this manner. Last point, I strongly suggest you have to show the workings. You have to, label the workings. For example, the fair value adjustment, working number 1. Working number 1 is about associates adjustment. 2, fair value. 3, deferred tax. 4, goodwill and NCI. So let's put the workings. I strongly suggest you have to mention the working, because the marker wanted to know how to refer the working accordingly. So fair value adjustment 2. Yes, that's working 2. Associate 1. Goodwill working 4. Other non-current asset adjustment, that's 2. Current asset 2. Inventory adjustment. Retained earning adjustments with reference to working 1, associates, and NCI working 4, deferred tax working 3. That's all. So put the reference of the working. That's icing on the cake. If you really wanted to get distinction, that's the point. So that is all about the working about pre-populated, that's autofill data, and this requirement also done. Last point I just wanted to cover here, last wordings, that's important. The marking schemes. Listen carefully. Equity method you have done, the equity accounting, that's having 1 mark. Remove, it's not about the sequence, it's about the marking schema. Okay, let's discuss with our sequence. First, we do the equity method, that's 1 mark. Gain on step acquisition, we will be able to get 2 marks. Then fair value adjustment including deferred tax, 4 marks. Goodwill calculation, 3 marks. NCI, 1 mark. And remove cost of investment, 1 mark. So as you work out the things accordingly, you will be able to gain the marks. And very important point, never forget the rule of own figure rule, OFR, own figure rule. That's the rule established by ACC examining team. What does that mean? For example, in this question, if you are doing that, let's suppose if you're you miss that adjustment, or you have worked with this adjustment, but actually you have done the wrong working. So first step you have done wrong. Automatically, if this point, first step is wrong, it will affect your rest of the part. So examiner here saying that if your first, second, third, any part wrong, so whatever you have done wrong, we will assume that figure and then assume that figure, that wrong figure. That's called own figure rule. And we will check your rest of the answers. If your rest of the answers become right, if your rest of the steps are right, we will give you the marks. This is own figure rule. So it's not about the negative marking, and don't have any fear about that. If first step is wrong, what will happen the next? No, you will be able to get full marks. So always remember the benefit of own figure rule and keep moving. Do your best. That's all. My last wordings here. Key takeaways about this part of the solution. Number 1, You must have to make sure that you have done all adjustment that belongs to careful reading of the question. Stick with the time management, because normally observation is that students are very much committed about the calculations and very desperate. Control your emotions. The allocated time is 22 minutes. You have to cover within 22 minutes. Don't forget the benefit of rule. It's not rule, it's about the benefit to student. Own figure rule. If adjusted consolidated financial statement or consolidated cash flows is not tie, having no equal balance, don't waste your time. Don't waste your time. Just make a quick review what you have done wrong. If it's not become balanced, move on. Move to the next question. Because if you unnecessarily invest more time to reconcile or match the balance sheet, for matching of the balance sheet, for reconciliation of balance sheet, actually you will lose the rest of the question marks. So always stick with the time management. If you have done something wrong, no worries about that. Keep moving. So candidates, that's all over with this series of session. I hope that you people have got a very valuable information. I strongly suggest, if you really get benefit with these sessions, do reply a feedback below the YouTube channel. Your feedbacks, it's very much valuable for us, especially the constructive feedback. So if you have any more question, you can contact me with my website hussainghazi.com, and email info@hussainghazi.com, or through the WhatsApp +923218271784. My last soft message: be committed, self-confidence, motivate, and positive mindset. Avoid negativity. May Allah, God willing, to qualify your exam. Assalamu alaikum. Goodbye.